Hi there, and welcome to Trading Strategies Tested. This is actually our first video and I hope that you'll enjoy it. We'll be going through a bunch of different trading strategies and we're going to test how well they work. The idea is to basically go through the charts, do 100 tests and tally up the results and give them to you so that you can make your own decisions. So here's the first one we're going to take a look at. It is called the RSI 80/20 50X Divergence, and this is how it works. So the rules is that you use the RSI indicator, you set it to a length of 8, you find the highest lowest point for the last 50 candlesticks, and this is your trigger candlestick. You check that the RSI is below 20 for a low and above 80 for a high for this particular candlestick. Then you wait for the next candlestick. It must close below for a low or above for a high, the trigger candlestick. The RSI must diverge from the price action on the next candlesticks. And the RSI must be hitting higher or lower when the price is going the opposite, lower or higher. And you enter on the first candle that closes higher or lower than the trigger candlestick. Now if that sounds a little bit difficult to follow, you'll be able to download this little guide on exactly what that looks like, but let's hop over to a chart and here you can see that a little bit more clearly. So the idea is that you're looking for something that was trending either down or up, down in this case, and you want to look at a spot where the RSI is below, over here, below 20 or above 80, and then you're looking for divergence where the price is still heading lower but the RSI is heading higher, and then you enter on the first candlestick and that closes higher. So this is our trigger candlestick right over here, and then this candlestick here is the first one that has closed higher after this divergence is being confirmed. So we're going to enter at this spot, and that is then when we are hoping for it to be heading higher in this case. Of course, the reverse works just as well, just the opposite rule. RSI would be above 80 and divergence would be the opposite than the price. Okay, so let's dive in and start counting, shall we? Alright, so here we have it. We have the Euro USD, and I've literally just taken it where we are at currently, and I'll be working backwards from here. No, that's not entirely the best way of doing this, but it is just easier in this particular case for our testing. So let's see. So we're firstly going to look for any place where the RSI is above 80 or below 20, and then we're going to see take a look and see if the market has been trending before that, it's made a new high or low, and then we'll be looking for the trigger case and the divergence. So let's continue without further ado. Here we have we do have it above, but this is not really 50. I'm not going to count each one, but I can, you can tell it's not 50 candles. This looks a little bit more promising. It is above, and we clearly have more than 50 candles over here, but we don't have any divergence. Here once again, we pretty much have the first part of the setup, but we do not have the second part, and I'm going to say that this is basically too far away for us to look at. Okay, this looks promising. So we basically have a sideways move and a low over here, so I'll take that. This is a low, RSI below 20. Here we have a further low with the RSI higher, and so here we have our trigger candlestick, and we're going to enter in right at this point. Over here we're going to target 20, at least 20 pips, and in this case I would set our stop down there. We have a winner. Right, and this is our last one. I'm only going to do 50. I'm going to be running out of time here because these setups don't occur all that often. But just to quickly recap, so here we have once again RSI going over 80. We have a nice high there, and here we have a high that's higher and the RSI is lower. Just to recap once again what the strategy is. Whoopsie, let me do that. And there we have it higher. Okay. So what we're going to do is we're going to do a low as soon as we break this. So I'll be around about here, aiming for about 20 pips profit, and the stop loss set at previous high or previous low or resistance level. And in this last case, we can see that it did not work, so it's going to be a loser. And there we have it. So we basically have 58%, so let's call it 60% accuracy on this. Some of the moves are, quite nice and large, but it doesn't happen a whole lot. So I would say you may be able to make some money on this if you had some very, very tight money management skills. Otherwise, yes, is it profitable in terms of pure percentage points? Yes, 58% at this point. And it's been hovering around about there the whole time. I doubt it's going to be any different if I go at this for longer. But yeah, is it a great strategy? I don't know. I don't think so. I think there are better ways of doing it. But hey, this is first in the test of a whole bunch of series of them, and I hope you enjoyed it. And I'll see you next time. So please remember, subscribe, like, and I'll see you next time. Thank you very much.